Good afternoon, ladies and gentlemen. I'm Hiran Samarasinghe, Head of Investor Relations for Sunshine Holdings PLC. And on behalf of my team, I would like to welcome each and every one of you for the first quarter results webinar for the financial year ending FY24. First, some housekeeping announcements. This webinar will be recorded and then later available in our IR website so that all of you can refer back on a future date. We will put everybody on mute for the presentation from our CEOs and then later open it up for Q&A. I can also send in your questions via the chat box, and I will moderate those questions to the respective business heads so that you'll get the answers for those. First of all, I would like to introduce my team who is present today. We have Mr. Shyam Satrasivam, who is Managing Director for Healthcare and Consumer. Mr. Aruna Deepthi-Kumar, who is our Group CFO. Mr. Shantha Bandara, who is our CEO for the pharma sector. Mr. Parman Nisa, who is GM for the consumer business, who are joining from this room. And from outside, we have Mr. Thiru Sandan, who is CEO for Sunshine Medical Devices and Pharma Manufacturing. We have Imtiaz Ali, who is CEO for HealthGuard. Mr. Sanjeeva Sarnapala, who is CEO for Sunshine Exports, and Mr. Binesh Pananwala, who leads Whatever Plantations PLC, including Whatever Dairy. So to start with, we'll first go to the corporate announcements during the quarter. I think in May, Fitch Ratings affirmed our AA plus rating with an outlook, stable outlook. I think the three key drivers for this rating was the market leading positions that we have in some defensive industries, which has proven to be very robust over the last few quarters. The second being the low gearing. We are currently at around 22% debt to total capital, and also our access to unutilized facilities and a strong balance sheet as a result. On July 2023, I think we've also paid ₹1.15 first and final dividends. I think the ex-div date got shifted to 6th July because of the bank shutdown due to the DDO announcement. I think given current share price, this translates to about 2% dividend yield, Sunshine. So with that, I think we'll get on to the main body of the presentation. We started with the performance. I would like to hand it over to Shyam to take it on from this point.
Thanks, Karan. Good evening, ladies and gentlemen. Thank you for joining us for Sunshine's first quarter webinar on our results. As you can see, we've had a reasonably good first quarter, 14% top line growth overall to hit 13.4 billion in revenue, driven significantly by our largest business segment is healthcare at nearly 47% of total revenue. That's had an 8% increase. As you would all recall, last year, first quarter had a significant increase because of the whole rupee depreciation. So on top of that base, we've grown 8% in healthcare. Our consumer business, which is both the domestic tea and confectionery and the tea exports, is the second largest sector for Sunshine Holdings at 35%. That sector has had a 20% year-on-year, quarter-on-quarter revenue increase, followed by agriculture, agribusiness, which is 18% of the total business at 27%. So that's just a makeup of our three sectors within the holding company. Strong EBIT for the year as well at 2 billion plus EBIT for the quarter, and followed by a PAT of 1.4. Our overall group leverage at quarter one is 22% versus 27%. So we've been steadily sort of reducing our leverage. Working capital has tightened and as through the last few quarters with high finance costs. Into more detail of our highlights, you will see that EBIT for the first quarter, while holding at 2 billion, is as a percentage lower. Again, this is due to the fact that in our tea export business, there's been currency appreciation in the first quarter. Hence, some tightening of margins on that end, as well as in our dairy business, we've had some EBIT losses as that business continues to go through growing sort of challenges as it stabilizes. Our PAT has had an 11% decline. This is primarily driven by the significant increase in finance costs. As you would all know, the first quarter finance costs still did not have all of the reductions that you're now seeing in the PLR, etc., flow through yet. So we've had nearly 536 million finance costs in first quarter of this year versus 277 last year. Hence a drop in PAT and PATP. Broadly looking across the last 10 or so quarters, the big trend is first quarter last year had a significant revenue growth driven by two significant events. At the consumer sector, it was the acquisition of the tea export business that scaled the consumer sector to be a significant contributor to the group. But also the overall increase was attributed to the currency depreciation, therefore price increases across our healthcare portfolio and also in our domestic consumer with tea prices being high, pass on to consumers. We see that now stabilizing in that context and now driven a lot more by volume growth going forward. So that's just a context of the group results for the first quarter. I will hand over to my colleague Shanta Bandara, who manages the Sunshine Pharmaceuticals business and our distribution business, to take you through some details of the healthcare sector. Shanta.
Thank you, Sham. Good evening, everyone. I'll take you through the quarter one highlights in our results. You may see the 8% growth in our revenues. That's mainly contributing from our medical devices business and also some of the garment supplies done by our Lina manufacturing. And the highlight for the quarter for the pharma business specifically was the 16% reduction in MRP, which took place in line with the dollar decrease that we saw where the rupee appreciated during the quarter. And in line with that, the authorities, especially the Ministry of Health, NMRA, advised the industry to take a price reduction of 16%. However, when the dollar went down to 295, we were asked to take the reduction in the price, which actually had an impact on us on the GPs, where in few weeks we saw the dollar again going up where rupee depreciated. However, that impact was accounted for the quarter one, which is you see in the EBIT, 26% growth is coming from the other businesses that I spoke of, medical devices and the Lina manufacturing. The overall PAT reported grew by 14%, and the main impact between EBIT and PAT was the finance cost that has been accounted for the quarter one for the sector. Moving on from the financials, a quick highlight in our market share in the pharma business. The good news is that we have picked up market share from compared to the previous quarter. The reported market share was 13.05 as per the market information. That is positive for us to continue to grow beyond the market of 33.7, whereas we are growing at 41%. Moving on from market share to a quick snapshot on how dollar movement in line with the price movement which has taken place. As you all know, the pharmaceutical mainly, which is the largest contributor in the sector, is a fully regulated in a fully regulated market. Whereas, as I spoke earlier, when the dollar took a dip or rather rupee appreciated, the authorities had a price reduction being advised, gazetted, which impacted us in terms of revenue drop and related margin drop. Whereas we saw towards the month end where the dollar was again picking up, which will have an impact us in the months to come. Moving on from there, let me hand over to Sandan to take you through the medical devices details. Sandan, over to you.
Thank you, Shanta. Good afternoon, ladies and gentlemen. I'll take you through some of the hospital trends which impact the medical devices market in particular, or the healthcare industry. And as you can see, the hospital occupancy was stabilizing towards the quarter compared to that of last 2-3 quarters. But if you see the lab test, which was dropping in the previous quarters, is slowly now beginning to grow. That's a trend we see. But another important trend we see is that operating theatre, especially in the private sector, we see the trend is going down, and we see a larger waiting list in the government hospitals. So because of this inflation, because of these trends of prices going up, with the disposable income coming down, we see the private sector trend is coming down and the government sector is increasing in its usage, irrespective of the current challenges. But in spite of all that, we have good news from medical devices. The medical devices business did extremely well in the first quarter.
I think it's restart again, no? Better to address it.
Sandan, I think there's an issue with the slides for the audience. I think it's not moving. Let me reshare the slides again. Don't
Okay.
mind.
Yeah, for us, it's moving. I'm still online and it's moving. Shall I continue?
Yes, go ahead, sir.
Sure. Okay. So as I was mentioning, it was extremely a good news for medical devices business. We representing in surgical, diagnostic, and the equipment business. We had a 40% year-on-year growth in terms of value. And the good news is this quarter, we saw the volume growth coming in as well. Because last year we had a 17 to 21% volume drop for the fourth quarters we recorded. But this year was the first quarter we saw the volumes growing back. And one of the big reasons for that is the government orders which were curtailed, because medical devices, a larger component, 40% of our business depend on the government sector, where they have started issuing the orders, where they started buying things. So we were able to participate on those orders. We got those orders, we invoiced them, which helps us to get a value growth as well as the volume. And not only we sold to the government, it helped us in some cash collection as well. Because of that, we improved our working capital, which helped the market move on. So that's the trend and the news from the medical devices. And if I may move on to our local manufacturing business of Lina. Once again, we have excellent results because we recorded one of the highest ever revenue for a quarter of 552 million, which is 3.6 times greater than our average. So this was once again possible for a couple of reasons. First being our MDI plant, the meter dose inhalers, which we got regulatory approval, which we launched the product last year, and we started supplying to the government sector. And this went on full scale. And I'm happy to note the meter dose inhaler plant, it operates on a 24-hour scale. And we gave the maximum possible, which allowed us to come to this revenue. In addition to our capsule and tablet line, where we continue to supply our dry powder inhalers as well. So this was the main factor for us to get into greater results of our Lina manufacturing, which is our local pharma manufacturing arm. And in addition to that, we want to expand our portfolio. We want to expand our product selling capacity. And we ended up signing with another contract manufacturer by the name Truewick, who had also consented to buy their brands being manufactured at Lina Manufacturing, which will further enhance our future potential and future revenue for Lina. So those are the two good news coming from the medical devices and the Lina pharma manufacturing. And let me now hand over to my colleague Infias, who will take you through the retail business. Over to you, Infi.
Thank you, Sandan. Good afternoon, ladies and gentlemen. Let me take you through the performance of HealthCard pharmacies. For HealthCard, the quarter one was primarily a recovery of HealthCard's footfall from last year to this year. We saw a healthy recovery in terms of footfall by about 8%. The SS in the table below denotes same store footfall growth. So you can see that on last year, quarter one to this quarter one, we have grown by 8% in terms of footfall. And in addition to the footfall growth, we also saw a slight change in consumer behavior as they move more towards pharma essential purchases, while wellness remained slightly sluggish. Overall, we have been able to improve our supply chain efficiencies, and that's why you see our overall pharma availability across the chain improve significantly. And we have been able to drive good promotions to bring footfall back and also to drive some amount of wellness-related growth. In relation to moving forward, we have opened a new store in Colombo 4 Duplication Road, which has showing good progress. And we hope to open a few more stores in the coming year as we see the market stabilizing and as more consumers return back into buying wellness and purchasing more pharma. That's the overall performance for HealthGuard Pharmacy. I will hand over to Mr. Farman, my colleague, to talk about consumer. Thank you.
Good evening, everybody. I will take you all through the performance of the consumer business. So as you can see in this table, we have this quarter performance compared with last year's same quarter. There's a very positive trend in terms of the revenue achievement. However, the profit has been impacted in two different ways. One is there was an appreciation of the dollar that affected the export business, which had an impact on the profit. At the same time, there was an improvement in pricing for the local business, in the tea business, more than in the confectionery business. That actually helped in terms of improving the profit. But net, we see a decline in the EBIT percentage and the PAT percentage. That's the first thing I like to say. Looking at the quarterly performances, you could see if you look at the volumes, because volumes can tell you the organic performance. If I take your attention to tea and the highlighted row, which is volumes, you will see that the volumes are 1009 Q1 last year to 1053 Q1 this year. Now, during that same period, the market had undergone a decline. I remember Q3 to Q1, we had about minus 33% decline in volume for tea. For confectionery, it was about minus 22% decline in confectionery units. However, in line with that, we have performed slightly better. We are holding on to the volumes, and the revenue growth is slightly more due to the price increase. Okay, next slide. What we are looking at now is the market share as shared by PepperCube, which does GT, retail market share assessment. It's only the general trade. It does not have the supermarkets. It does not have institutions. So looking at that, the blue bar, the blue segment is Sunshine. And you can see that when we arrive to the June month, our market shares have actually come to a healthy 47. That is the good news. We hope to maintain that. However, I have to caution in the sense that the market is going through volatility. Prices could go through changes in the next 2 quarters, and we have to intelligently play in that context. Yeah. So if you take confectionery has been a challenging market. Our shares have actually slightly reduced from what we were a year ago. You can see our market shares at 24%. This is value, but volumes we are actually holding on. And our competitor in bubble gums, they have managed to take a significant price increase, which has helped them in terms of improving their share back to what they were 2 years ago. If you go right to the beginning of the chart, you will see 41%. That was the type of share they had, and they've come back to something close to that. We hope to address this with some of the innovation and some of the pricing strategies in the next 2 quarters. Yeah. This particular chart tells you, the left chart is on tea, the right chart is on confectionery. It tells you with the changes in the market, or rather our cost, the tea auction prices from one side and the sugar prices from the other side, while we were actually trying to figure out how the future would be, how quick were we to take price increases? So for sugar, which affects our confectionery business, we were bold to take a price increase in the beginning, and subsequently we were able to maintain that. However, in tea, which is a fairly much more competitive market, we had to take gradual steps. So the price increases were graded, as you can see. There were 3 levels of price increases. And in the current context, in fact, there is a little bit of price contraction that is expected to happen. Yeah, I would like Mr. Sanjeev Sarnapala to actually take it from here. Sanjeev.
Thank you, Farman. Good afternoon, ladies and gentlemen. From Sunshine Exports perspective, which is mainly coming from tea, we saw a decline in volume from around 980,000 kilos to about 730,000 kilos for the first quarter, which is about a 25% drop year on year, keeping in line with the Sri Lankan exports drop to the Middle East and European sector in that same region. However, overall Sri Lankan exports dropped only by 6%. In regard to revenue, we had a contraction of about 20% in revenue. This is mainly stemming from a 25% appreciation of the rupee in the first quarter from 360 rupees to around 285. And at the same time, about a 30% drop in tea prices. So this has also filtered down to the bottom line. That's the update from Sunshine Exports. Thank you. Over to you, Binesh.
Thank you, Sanjeev. Now I'll take you through the agribusiness, which consists of watermelon plantation and also watermelon dairy. Mainly the first quarter of the current year have been quite a good quarter in terms of the volume. Therefore, the revenue growth from last year, the quarter is 27.3%, which is quite a good increase despite of the prices coming down. Similarly, the fourth quarter comparison with the fourth quarter of last year. In terms of the PAT, again, there is a growth of 2.3%, which is again coming from the volume growth that what we have seen. In the segment-wise, palm oil, the revenue grew by 23.8%, whilst the dairy grew by 53.2% on year-on-year. In terms of the palm oil, the production, there is an increase of about 50%, 50.4% increase year-on-year, which is a good sign and which is a positive news for the palm oil sector. In the meantime, the dairy, the margin contracted to 42% from 44.2% last year. It's mainly coming again from the feed cost. However, on the hindsight, the dairy prices are maintaining at the same higher prices of the milk. In terms of, as I mentioned, that the CPO or the crude palm oil production is 50% higher, whereas the milk production has also the 19%. Whereas the prices of the milk is maintained at 29% over, whereas the palm oil prices, when you take it on the global palm oil prices, have been coming down, and we are seeing the lowest in month of May, and now the good news is that it's picking up again. So as I mentioned, the palm oil that we saw in 2022, the highest prices in the global palm oil segment, which was around 7,100 ringgit, which dropped to in May to something around 3,500 ringgit. And now again, the good news is picking up and stabilize around 4,000 at the moment. And we expect that to move up in the coming months due to the shortfall in crop in the global market. At the same time, in WDL, the milk prices have been maintaining. It have been quite static during the last couple of quarters. And hopefully that we should be maintain the same prices as we go on. So that's an update from the agri sector. And now I'll hand you back to Hiran. Hiran,
thank you, Binesh, for that insightful presentation. I think we can open it up for Q&A now. So you can all raise your hands up, and I'll unmute, and you can ask the questions online, or you can use the chat function and I'll moderate however you're comfortable. I think we have Asanka. Go ahead, Asanka.
Thanks, Iran. Thanks, Shyam and the management team for the call. To start off with, can you give some color as to how the interest cost might sequentially come off as the quarters pass by? That's my first question, and I'll move on to the other questions thereafter.
You want to take that on the interest cost?
Yes, actually this quarter, year on year, there is a significant increase in the interest cost, mainly due to one is the interest rate. That reduction hasn't captured during this first quarter. However, we expect to reduce the reduction in the Q2 quarter two. So year on year interest cost increase. One reason is the utilization for working capital and also the higher interest rate. And also this interest cost includes the foreign exchange loss due to rupee appreciation, some of the dollar receivables from export business, and also some of the dollar deposits that valued 30th June at a lower rate. Those are the main reasons.
Thanks, Aruna, for that explanation. Again, if there's any more questions, we are happy to answer. I can post it up on the chat box as well. I think another one, I think from Bimani. Let me unmute. Bimani, go ahead.
Yeah. So in terms of overall consumption uptick, how do you are seeing the main sectors that you are operating in terms of the consumption? Is there like a uptick in the basket sizes and the ticket sizes that you all are seeing at the moment, or is it still relatively slow?
Thanks, Bimani. I think I'll break it up. I'll ask Infias to take on in respect of HealthGuard, and then later maybe Farman can add some color on the consumer space. Infi?
Sure. So in terms of ticket sizes, we haven't seen an uptick at all. It remains flat. Last quarter, Q4 to Q1, has been relatively the same basket quantity per consumer. There has been a marginal increase in overall basket value of about 3 to 4%, which shows that the impact of the price increases have been fully dialed in. So there has not been a major increase in the basket value, while the basket size has remained pretty much at the same level as Q4. Hope that answers the question.
Yeah. So from a consumer point of view, in the last, let's say, 6 months, maybe Q1, that is January, February, March, compared to April, May, June, we began to see some stability. However, if I give you numbers, confectionery markets from Q1 or other April, May, June to January, February, March, there's about 4% market decline. Now, similarly, if you take tea, it was reasonably less than 4% for tea. However, for the month of July, we are noting a slight change in the market dynamics. That is, the loose tea availability is rising, significantly. So that is leading to a slight drop in the branded tea segment. So in terms of market consumption, from a household point of view, I think generally the household consumptions have generally stabilized in the last maybe 4 months or so. We are not seeing it going up. But the loose tea phenomena, what I just mentioned, could impact us, because if the migration again goes high because of loose tea availability, that can hurt the branded tea segment.
Thanks, Farman. I think there's a follow-up question on basket size. Infi, if you can take this question is, what is your expectation on basket size movement going forward?
We believe that the basket size will remain the same in these levels at the current levels it is. We don't see a significant uptake in the basket size or the basket value in the next 3 to 6 months.
Thanks, Intvi. I think Asanta, you had another question to ask. If you can go ahead and ask that.
Iran, if I may, I have few questions to ask.
Go
First,
ahead,
I just want to circle back on the interest cost questions, given that it's probably the management that who will have an understanding as to how the utilization of the credit lines and would be and how the rates might they are expecting the rates to decline. Can you give us a sense as to how the interest cost may be by the end of the financial year?
Sure. I think from a business perspective, from what we read in the market, we see costs of borrowing to significantly reduce. It's already started playing through in Q2, and we think it'll continue to reduce into Q3. And since our businesses do have significant working capital requirements, that should dial down into the P&L per se. So that's a broad take of where things stand as of now in terms of rates and impact on the business. Of course, growth opportunities may change our utilization of funds, but broadly, it should be lower. Right? Finance costs should be lower into the next 2-3 quarters.
Thanks, Shyam.
Thanks, Shyam. I have another question on the palm oil pricing. Now, correct me if I'm wrong. I believe your palm oil selling price is determined by the global market prices from time. Sorry. So my belief is that palm oil prices at which you sell palm oil is determined by the global prices. And given that currency has depreciated, does it mean that you will be able to maintain a higher rupee price? And because of that, at least in the short term, would you enjoy a higher margin compared with, let's say, 2 years ago, at least in the short term?
Yeah, so I think primarily, let me ask Binesh, the CEO of Watervilla Plantations, to answer that. Binesh.
So thank you for that question. I think, as you correctly said, that the first determined factor of the prices comes from the world market prices, which, as I mentioned before, it had been coming down, and then now it has started picking since the month of May. The second factor which is considered is the special commodity levy, SCL, which has been imposed while we import the palm oil, which also has not changed for the last 2 years. The other factor is that mainly the availability of the other competitive, the oil, which is coconut oil, at what price that you could import to the local market, which is lower than the palm oil SCL or special commodity levy, which is being imposed for palm oil. So therefore, when you import coconut oil to Sri Lanka, it is cheaper than importing palm oil. So as a result that we see in the market, there's a disparity which has changed slightly, but with the current changes which will come with regard to the duty changes, etc., this might change and palm oil will be cheaper than the coconut oil. But as of now, coconut oil is cheaper than the palm oil. So these are the factors which will determine. So, and also that as a result, the sales volume of palm oil have dropped in the local market, and that has an impact on the selling price, as you mentioned, though there's exchange rate difference in the local market, it's difficult to sell at the same prices put together world market price plus the special commodity levy. Hope I answered your question.
Binesh, I want to kind of clarify that. First thing is, but like for like, now let's say palm oil global prices is $100, right? Earlier $100, when you convert it to 200 rupees, it was 20,000 rupees, purely as an example. Right now, if you convert it it will be 36,500 rupees. Sorry, about 32,000 rupees. So even if the $100 price moves down to about $90, given that now the translation means, given where the currencies, whether the rupee price will still be higher, and given that it will take time for your factory's running cost to come up, catch up with the currency uh, uh, catch up with the increase in cost due to currency depreciation, would you enjoy a structurally a higher margin than 2 years ago before the currency depreciated? That's the question I
Yeah,
wanted
so
to ask.
So I take a point. It's like theoretically that's right, but unfortunately, it all depends on the demand. So prices depend
Right.
on the demand locally, which was used to be the case earlier,
Right.
whereas when the exchange rate varies, that we take that to our advantage. But as of now, due to the demand locally, that doesn't come to play. So
So
therefore, that you
Binesh,
don't get that advantage.
thank you for that. Binesh, we've seen that in the recent quarter, there has been sharp growth in volumes. Can you explain what drove that volume growth, please?
So I must say that like the palm oil is oil palm crop is a perennial crop, which what we would have harvested in the last quarter. Technically, it would have formed 2 years ago. That is that at the height of the all these scarcities of fertilizer, non-availability of thing and high cost, and we were managed to put out only a less amount of fertilizer at that point. But however, the company made a good progress in applying organic fertilizer, since we have our sister company, which is whatever dairy, where we transferred all that the compost to our estates and put it out. Those are the results that we hold on to. But whereas if you look at somewhere else, you may not see the same thing which is happening, which we are having that advantage of having ample amount of that volume, which is we have managed to hold on in the first quarter.
Thank you, Binesh. Hiran,
Hope
I have
I
one last
answered.
question. Yes, Binesh, thank you. Hiran, I have one last question. Shall I wait for others?
Go ahead, Asan.
Yeah. On the tea margins, what we see is that even according to the presentation that you guys did, that you guys are holding on to your branded tea price. Now, how are the dynamics in the branded tea markets? Would you be able to hold on to those prices along with the other players so that your margins will improve?
Yeah. So one favorable thing is that we have observed that the auction tea prices has a slight contraction in the prices. That is helping us improve profitability at the GM level. Now, we hope to set an outlook, and we believe we are in a position to give a price advantage to the consumer for the next quarter. And we have that plan. For quarter two, our outlook is a positive, the more positive GP condition, better than what was in quarter one.
Thanks. Thank you, Hiran. That's all from me.
Thanks, Asankar. I'll move on to some questions from the chat. I think one question from Smith is actually a two-part question. Is there any deleveraging plans in the business, like cutting down sectors that are not profiting? The second part is how long will the interest expenses drag the bottom line? I think Aruna and Sham answered that. Sham, do you want to take?
So thank you for that. We periodically review all of our businesses to ensure that they are overall contributing to the group. And from our past, we've exited sectors like the tea plantations, renewable energy, etc., while entering new spaces like pharmaceutical manufacturing and confectionery. As of now, we have no declared plans of exiting any of our current sectors. We're focused in healthcare, consumer, and agri, and more driving current growth businesses to deliver the bottom line.
Thanks, Sham. I think moving on to a question from Himasha. I think Binesh, you can take this. in terms of what percentage would fertilizer cost account for out of cost of sales?
Yeah.
Can you get some color on that?
Yeah, so at one time it used to be about 60%, and then we ended up with 35% on the cost of sales. But currently it has come down to about 30% of the cost of sales. So we can see that the prices are coming down.
Okay, thanks, Dinesh. Moving on to the next question from Dinesh. I think Sanjeeva, if you don't mind taking this, is there any move to have import of tea crop from for blending and re-export in recent months? I think it's an industry question. If you don't mind answering.
Yeah. So there has not been any change in regard to that, apart from what is already there in the import regulations. So it's only the specialty teas that are permitted to be imported, and there has not been a change from the Sri Lanka Tea Board on that as yet.
Thanks, Sanjeev. Moving on to the next one from Isuri. The question is, what is the minority interest coming from healthcare sector and the agri segment? Aruna,
thank you for the question. Isuri, healthcare segment in the manufacturing segment, Lina, we have the minority interest, minority shareholders, and also agri sector. Yes, we have minority shareholders being a listed company, as well as joint venture partners.
Thanks. Moving on to the next one. Any current plans to expand your dairy business into other value-added products? Any other current products you offer apart from packed fresh milk? I think just to clarify, we divested the value-added products business in the dairy to focus on the farm and upstream. So currently we only have the upstream operation. Moving on to the question from Smith. According to the FY23 annual report, product specialists are migrating after the crisis in Sri Lanka, and there is a lack in talented people. How is the condition right now, and have the group found quality and fitting people yet? Sham,
sure. So this is the concern all companies have in terms of talent, retention, as well as recruitment. It's been quite challenging over the last 2-3 quarters to be able to retain talent. There has been lots of key talent in positions, but we've continued to communicate our employee value proposition. So therefore, have been able to attract talent from the market and fill key positions, and continue to ensure that we're able to deliver on our business plans. But it is a challenging situation on talent.
Thanks, Sham. If I may jump on to some questions, I think there are some hands raised. Bimani, you have another question for us?
No, Hiran, it's the previous question. Thanks.
Okay, sure. Ruchi, do you want to go ahead?
Yes, hi. Thanks for your presentation. Just a question on the tea business. I believe I think your volumes grew 4% in the quarter in the tea business, if I'm not mistaken, after 4 quarters of negative growth. So I guess, the question is, are you seeing any recovery in demand from the consumer side despite the higher prices? Because I saw the prices also haven't come down. So despite that, you're seeing volumes increase. And also compared to, your tea volumes pre-crisis, how are they now compared to, say, 2021 levels? Are they still significantly lower to where they were before the crisis began in Sri Lanka? Thanks.
Yeah, I think, okay. So I think I partly touched on that before. So in terms of the market consumption, it's broadly stable. The contraction that the market faced in tea from last year to this year is still stable. We don't see it significantly contracting. Like I mentioned in my first slide, I think roughly about 22% to 30% of market decline was faced from Q1 to Q1 for tea and for confectionery. Now, if if you look at the last 6 months or so, there is some stability in that. So that's the first point. Apart from that, in terms of tea prices, yes, tea prices, it actually got into another level, and we used to buy tea 2 years ago in the range of 600, 700, 800. But now, from that high level, it has subsided a little bit. Still, it's high. Still, it's in the range of 1,002. In average, it's in the range of 1,002. Yeah, so there is some, I can't say normalcy because there's still much more to go. I think the good harvest is also helping in bringing the teas down.
So, but sorry, go ahead, yeah.
Yeah, that's
but
it, yeah.
Yeah, but going forward, I mean, with the low base impact from last year and with, in general, hopefully consumer sentiment improving in the next couple of quarters, I mean, is there room for your tea volumes to improve even further from here?
Consumer sentiment improving, consumers are getting more used to what is happening. Their costs have gone up, their incomes haven't gone up. Essentials have benefited in some way, and therefore they are sticking to the essentials like tea. But whether they're going to increase their consumption, my guess is very unlikely. That's going to happen. But so our game in the future is not wait for the market, per capita to go up. Rather, the game has to be in terms of driving conversion from competition. So some of the decisions we're doing now is more driven to that. How do we drive more conversion and impressing the market on the value proposition? That's what we're trying to do.
Okay, and just a question on the healthcare medical device business. You mentioned volumes grew 21% year-over-year on the quarter. So what kind of product segments drove this volume? And also on Lina, the pharma manufacturing side, you mentioned you're partnering with this company called Truvik for contract manufacturing. Can you give a bit more detail on that? Thanks.
So to answer on the medical devices business, the volume growth is mainly coming from our diagnostics. So we represent Siemens and Erba in the diagnostic space. So that's giving the volume growth. And if you take the surgical, we represent principals like Johnson & Johnson, 3M, and even Coloplast. So some of those orders from the government sector is giving us the growth. So these two are driving the growth for, specifically if I answer in the medical devices, is the surgical and the diagnostic space where we are seeing the volume growth. And in terms of the contract manufacturer, which I mentioned, so that party has shown interest to manufacture their meter dose inhalers and the dry powder inhalers. So we are planning to manufacture their brands in our premises to cater to the local demand. Trust I answered both your questions.
Sure. Okay. Thank you. Thanks a lot.
Thanks, Ruchi. I think I'll jump to some more questions on the chat now. Harushi has asked, what is the potential capacity of Sun Tea exports in terms of volumes? Sanjeev, if you don't mind taking that question, either the volume or can give an average capacity utilization for the quarter, ballpark?
Yeah, so the focus is on volume growth. We see that coming from the Far Eastern sector, but of course, unfortunately, the Middle Eastern and the European sector has reduced. In the first quarter, we saw about 65% of utilization. So we have enough capacity to grow, and we are focusing on that.
Okay, thanks. I think moving on to the second question from Harushi, so Dinesh, how long will it normally take for global palm oil prices to be reflected in the SL market? I think Dinesh can take this.
Yeah, so I think it will take at least, we have seen a huge difference about 6 months ago, but now it had bridged the gap, and we hope at least in another 3 to 4 months that this situation will get corrected with the increase in the sale volumes in the local market. But the global prices also will move up. It will not move to the levels in which it moved up last year. Hope I answered that question.
Thanks, Vinesh. I think another question on agri from Himasha. Are there any plans to expand the maize cultivation?
No, we will not expand the maize cultivation. After all, we will not do any cultivation of maize in the current year, mainly due to the change in the agricultural policy of the government, and also that we foresee there is ample amount of maize being grown by the farmers. Therefore, that maize will be available at cheaper price than us growing our own maize. So we will not go in that direction in the current year.
Thanks, Vinesh. I think, Sayandan, there's a question, two questions actually from Isuri and Tarushi are directed to you. What is the current capacity utilization of leaner Spyro and leaner manufacturing? It's the first one.
Yeah. So if I may answer that, the leaner Spyro, which manufacture the meter dose inhaler, we are going at a capacity utilization about 80%. So that's what we are. And if you come to the other lines, the meter dose inhaler line, the capsule line, we are going around 50 to 60%. And the nasal spray, we are around 34%, but that had been the demand. So the capacity utilization is high on the meter dose inhaler, but the tablets, nasal spray, and the capsule line, it's at 35, 40, and 50%. We are going on that capacity.
Okay, thanks. Moving on to the next question, again to you. Will there be more opportunities to manufacture other medicines locally given import and quality issues? How ready is Sunshine to accommodate such opportunities in terms of capacity?
So if I may link up to the previous answer, since we have the capacity utilization at a lower rate for certain lines, we have a lot of opportunity to manufacture local products, so which we are working on. And we are very much ready. So from an R&D point of view, already we have put out the aspirin to the private market. So we have launched this and we are planning to manufacture the second batch as well. So from our R&D department, we have 9 molecules lined up. So we are getting ready so that all the lines go up to the full capacity. So we are ready for that. And we are planning to do that on one side. And also we signing up with contract manufacturers. We are planning to sign a few more, which will also increase our capacity and our volume of production, subsequently increasing the revenue and the volumes.
If I can just jump in there, Hiran. Broadly, quality control has no impact on local manufacturing. Quality control applies similarly for either imported product or local manufacturing. So the quality issues that we see in the healthcare market have nothing to do with manufacturing origin. It's to do with regulatory controls in the market and our capability to do quality assurance. So just some clarification in terms of quality can't be resolved through local manufacture. Quality needs to be resolved through quality assurance investment by the regulator to deliver that. So whether it's imported or locally manufactured.
Thanks, Shyam. I think, Sayandan, if you can take this one as well from Dinesh, can you comment on if there are any government payables in the, I think, status of the payables from the healthcare sector? I think you lead the two businesses that sell broadly to the government. You can give some color on that.
Yeah, so there's always a payable amount pending from the government. But what's happening is we've been collecting them. So if you take the local manufacturing, we are collecting the payments around 120 days. And if you take the medical devices space, it's around 150 to 180. So always the payables. So we have budgeted for those working capital, but we've been collecting those money and we've been efficient on that, which had reduced our working capital from last year to this year.
Thanks, Sayandan. I think Infi, if you can take this question from Tarushi, what is the strategy for HealthGuard in the long term? For example, we can see supermarkets expanding their wellness shelf space. How would HealthGuard differentiate to compete?
Thanks, Hiran. Great question. HealthGuard will continue to expand its retail footprint and its digital presence in the near future. So to that end, we will continue to expand within Colombo district and to the neighborhoods that are relevant to HealthGuard. In terms of the question related to supermarkets entering the wellness space, yes, there are more supermarkets expanding and they do have certain assortments in wellness, but our assortments are far more extensive than what you would find in a supermarket. Supermarkets would carry approximately 25 to 20% of the entire wellness assortment. HealthGuard would have a far more comprehensive assortment. Secondly, I would say we also differentiate through our unique product offerings that you don't find in supermarkets. And therefore, we become more of a destination wellness/pharmacy retailer. And finally, the wellness also requires certain amount of expertise to help consumers make choice and selection. So in that relationship, we believe we have an advantage with our competent and talented workforce. So those are how we hope to differentiate and compete in this area. Thank you.
Thanks, Impi. I think one last question on agri from Dinesh. If Dinesh could take on this, how dire is the failure in the rainfall and how this will impact the agricultural output? Also, a brief comment on the fertilizer availability and its cost.
Yeah, I think the rainfall is a very much important factor in agri. But the good news is that we are the crops are coming mainly from the western slopes of the Sri Lanka. So therefore, that it doesn't have at the moment the drought is mainly in the dry area. So we will maintain the crops and we will have the crops in the coming months as well. And we expect, but it will not be up to the same level of first quarter, but there would be crop will maintain at the same levels. In terms of the fertilizer availability, I think it is regularized and there is ample amount of fertilizer available in the market. But only a difference is the cost is not high as it used to be about year and a half ago, but it had come down and it gradually coming down further. So that's a good news with regard to fertilizer, and with that the fertilizer application also will be higher than last year, and vice versa, the crop also will be higher.
Thanks, Vinesh. And I think it's time for us to wrap up this session. I think on behalf of us, the whole Sunshine team, I would like to thank each and everyone for that engaging session. And we hope to see each of you joining our webinar next quarter. That's, I think, falling in November, mid-November. So till then, have a good evening. Thank you.